Welcome and thanks for joining us at EMII.com. I'm Kathleen Reddington with your hedge fund headlines. Today is Tuesday, August 5th, 2008. Pride Investment has committed to raising $50 million for its latest China pre-IPO investment fund. Asian Investor is reporting that the fund will invest in selective names and sectors that will benefit from the government's national development plans and economic policies. The fund is a China-focused fund management group that was founded by Louis Wan, the former CIO of Marco Polo Investments. Minimum investments in the fund is 500,000 Hong Kong dollars. Investors will receive regular dividends from Pride Investments but will not be allowed to reinvest in the fund. The new fund only deals in venture capital and is pre-listing opportunities. There will be no A shares in the fund's initial portfolio pioneer. And staying with hedge fund news, Jack Nash, who pioneered the modern-day mutual fund and hedge fund businesses, has died at age 79. Nash died Sunday at Mount Sinai Medical Center in Manhattan. Nash's investment career began at Oppenheimer & Company, where he met Leon Levy, forming a partnership that would last decades and become legendary for its foresight and returns. Nash became Oppenheimer's president in 1974 and chairman in 1979. He helped grow the firm into what was once the world's second-largest mutual fund business. And in more hedge fund news, according to International Securities Finance, total assets invested in Asian-focused hedge funds remain nearly unchanged in the second quarter. According to data released by Hedge Fund Research, Asia-focused hedge funds grew by just 0.25% as a total inflow of more than $530 million in new capital was partially offset by a performance-based decline of nearly $320 million. This inflow total represents a drop of nearly 50% from the approximately $1 billion in new assets added to Asia funds in the first quarter. Investors displayed a strong preference for strategies and regional exposures in Asia as a result of significantly realized volatility. Arbitrage strategies saw assets grow by more than $730 million, while assets committed to event-driven strategies fell by more than $525 million. And in other hedge fund news, Sidley Austin has continued the expansion of its London hedge funds practice, where a new hire from the U.S., Barry Breen, formerly of New York firm Tannenbaum Halpern, joined Sidley's London office earlier this month as counsel in the investment funds, advisors, and derivatives practice. Breen's hiring not only highlights Sidley's push to grow its international hedge fund practice, but raises questions about the future of Tannenbaum's London office. Breen, an associate at Tannenbaum, was the de facto head of the firm's satellite London outpost, which is understood to have been left with just 2 lawyers following his departure. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto our hedge fund channel online, read the full stories and the latest developments.